Living in the U.S., right? If we look at most of your portfolios out there, I would say you're heavily leaned more towards U.S. type companies. And people don't understand even how to invest in international companies. But some of the biggest companies in the world, of course, are not located here. So diversification is going to be your best friend, or it could be your worst nightmare. So when you look at the performance, Al, when things go bad, people enjoy diversification, but things are really good, then they hate it.
Yeah, that's exactly right. Let's talk about diversification during the Great Recession. March of 2009 was the low, but this actually starts in January 2008 to February 2009. This would be the value of $100,000 during that period of time. And what you can see is from beginning of 8 to the low of the market, cash did better. Cash doesn't do much. A diversified portfolio went down, and an all-stock portfolio, of course, went down. I mean, that's what happens with stocks. But look what happens if you sort of look at the recovery after March. Cash, of course, stayed the same. The diversified portfolio did rather well. All stock did better, of course, if the stock market is going up. But here, to me, is the key. If you look at both periods together, beginning of January to past the recovery, you can see that, of course, the stocks did better, but diversified did almost as well without as much dangerous of a ride. And this also shows why you stay invested, because a lot of people got out at this point and then never reinvested. It's important to stay invested, stay in the market, and that's such a hard thing to do, Joe, when the market is going up and down, is to stay the course, but I think it's important.
Yeah, I mean, diversification has a lot of benefits. But yeah, when you see the markets tank, and if you're diversified, right? Yeah, of course. In 2008, that's kind of a terrible example, to be honest with you, is because everything kind of was correlated together. It really didn't matter if you had international stocks, emerging market stocks, small companies, large companies, whatever. The market cratered. But if you look over the long term of diversification, adds a lot more value. It also keeps people in their seat, I think, is the more important thing, because you're not going to see those huge dips. But on the other side, then they get anxious, or not anxious, but they get upset because if I had all stocks, my portfolio would have done X, but because I was diversified, I had cash and bonds and maybe real estate in there that tampered my overall rate of return, then they might jump ship on that end too. So
we do see that, and the whole idea of diversification really is to have a smoother ride, and that's important when you're in retirement.
Do you know that we have a DIY retirement guide, do-it-yourself retirement guide? Go to yourmoneywealth.com, click on that special guide, and get on the path, to financial freedom.